Hello everyone, this is the Mortgage Sensei back with you with another video. Today I want to talk about when you're looking to buy a house or you want to buy a house, right? 8 ways to reduce your out-of-pocket costs. 8 ways to reduce your out-of-pocket costs. Let's hop right into it. Number one, compare lenders, right? Not all lenders are the same. Not all banks are the same. For those that haven't already, please grab a copy of my book. I'll go into this in detail, but there's a difference between retail lenders, direct lenders, credit unions, brokers, right? They all run a different model, which requires different margins, which affect your interest rate or your rate and pricing, right? So, do yourself a favor. I always tell people go with a broker first. I'm a mortgage broker. We work with over 70 different lenders. So we make that process easy for you, right? Imagine yourself going out there trying to talk to 70 different lenders where you just come to me and I'll do all the heavy lifting for you. So number one way is to compare lenders. Number two way is to get seller concession. Right now, we're seeing this a lot in the market. Basically, what's occurring is that the number of people that's out there looking to buy houses, that number is coming down, and the inventory is starting to rise, meaning that those properties, those sellers, their homes are sitting on the market longer than, a couple weeks like they were, a year ago. They may be on there for 3, 6 months or longer, right? The longer the home is sitting on the market, the more distressed the seller is in, the more you can ask, hey, Mr. and Mrs. Seller, I need you to pay my 3 to 6% in closing costs. Be sure to review a loan estimate, get with a loan originator like myself to make sure that you know your numbers before you enter into those conversations as far as negotiating with the seller. But that's number two for you. Number three, lender credit, right? Now, lender credit has many different faces, but ultimately, here's what it means. You're dealing with a lender, broker, whatever, right? And you look into options where you're going to get a credit from the lender to cover your closing costs or your escrow account set up, right? Lender credit is a great way. We were seeing that big time last year when money was readily available. Interest rates were at historical lows. They're a little bit higher now, or a lot higher in some cases, but they're a lot higher now, and those lender credits are starting to disappear or reduce themselves down from, I've seen them as high as $10,000, $12,000 last year, and they're getting down under $2,000. So name of the game, great credit, great loan, great program, and look for some lender credit. That'll greatly help reduce your out-of-pocket expense. Number four, close towards the end of the month. Now, this may sound a little bit odd to those that don't know, but when you close and fund a loan, or you have what is called per diem interest. This is the daily interest charge based off of your interest rate, broken out annually, on a daily rate, broken into a dollar amount. So every single day that goes by, you accrue this interest so that when you do make your first month's payment, enough interest has been built up, it's been allocated for, the bank or the lender isn't losing out on interest, right? Now, when you close towards the end of the month, you got to allocate a full month. At the beginning of the month, you got to allocate a whole month of interest towards your closing costs. Whereas if you close towards the end of the month, you may have 1 day, 2 days, whatever of daily interest that's factored into your closing costs. So again, close towards the end of the month. Number five, what we got here? Number five, choose your title company, right? Now, when it comes to the home buying process, I know a lot of lenders out there, they may choose your title company for you. In a lot of states, the seller would choose your title company for you. And most buyers just go along with it. They don't really put up a fight, don't really argue. But just know it is your right to find a better title company, someone that might give you a better deal on your settlement costs, your recording costs, your title insurance, right? Now, this means you're going to have to do your due diligence. Most lenders aren't going to go out there and shopping around for title insurance because in our world, they're all about the same. But if every penny counts, right? Picking your own title company, maybe you got a special relationship with someone that you know and they're going to give you a great deal on it. I don't know. But choosing your own title company is a great way to reduce your out-of-pocket expense. Number six, choose the right program, right? In a scenario where a client qualifies for a particular loan, let's say you want to go with a conventional loan, but you say, hey, I'm gonna go with an FHA loan. I'm gonna go with, this other loan program. Some loan programs for the same exact person cost more than other programs. If you're looking for to greatly reduce your out-of-pocket expense, If you're a veteran or serving in the military, VA loan. If you're looking to buy in the country or in a rural area, USDA loans. Or maybe a down payment assistance program where there's two factors to it. Either you're looking to get a grant or you're looking to get a second mortgage, all right? But choosing the right program will greatly reduce your out-of-pocket expense. Number 7, what do we got here? Number 7, reduce your purchase price. I know you may not like it, but that expensive house comes with expensive closing costs. So if you are in a situation or you're in a pinch where you just don't have that much money or to get that $500,000, $600,000, $800,000 plus house, then maybe you need to look at something around $450,000, maybe less, right? Work with your budget, right? And get into the home that fits you financially. Don't overextend yourself and be house poor is what we call it, where, 35-40% of your gross income is going straight to a mortgage payment and you have no other supplemental income. You have no side job, no anything like that. Choose your right purchase price. It makes a difference when it comes to your out-of-pocket expense. The next one. Now, the last but not least, this is number 8. Now, this is not, for my partners out here. I'm not telling customers to go do this, clients to go do this, right? And clients, I'm telling you that, if you ask for this, right, be careful what you ask for, because you may not get the quality of service that you want. But in some cases, rare cases, I'm gonna go to that extent, you may be able to get what is called realtor credit. This is basically the realtor saying, I'm gonna give up a portion of my commission to help you get into this home. Now, again, you're asking someone to reduce their price for giving you high quality service. Now, if they're giving you crappy service and they're not responding to you, then maybe that makes sense. But if they're a rock star, they're answering your phone calls, they're showing you everything you want, answering all your questions, always have an answer for anything for you, they're reliable, they're on the job, right? They deserve to get paid what they're worth, right? But if there's a situation and it's a deal breaker and you need some help and you've tried everything out there, your last resort is maybe talking to the realtor, and maybe the realtor can help out. But again, I wouldn't put that at top. I wouldn't bank it. It's more of a bonus number, really. But, be careful what you ask for, because that may result in lower quality service, right? And then I'm going to leave you with this one, right? At the end of the day, when you're looking at your loan estimate, right? This is your initial loan disclosure that comes out when you're looking to purchase a home or refinance a home or whatever. Take the time to read the loan estimate. If stuff doesn't make sense, if you need some help understanding what you're looking at, I know there's some math whizzes out there, that's myself for sure. But there's a lot of people out there that they're not a math whiz, right? They just want the basics, don't want the simplicity of it, right? What's my out-of-pocket expense? What's my monthly payment? And they're moving on, right? But take the time to read through the loan estimate. It is imperative. Take the time to read through your closing disclosure. It is imperative. And then understand what those charges are. And then understand, okay, what charges can I negotiate, or what charges can I go and shop for, right? It'll literally say it on there, the loan estimate, if you read through it. But be educated through this home buying process. Most people buy a home or refinance their property actually every 5 to 7 years. But most people look to buy a home, once every 7 to 10 years, maybe even longer. It might be your forever home. But take the time and read through what it is that you're getting yourself into. This is Nelson Thompson, aka the Mortgage Sensei, powered by Edge Home Finance. And I'll see you on the other side of home ownership.